Self. Amnish Aggarwal joins in on the show right now with his thought on the markets and stocks. Amnish, hi, good morning. Good to have you on the show. Let's pick it up from that, Amnish. Torrent Pharma looking to acquire this controlling stake in JB Chemicals from KKR. It's an equity valuation now of 25,689 crore rupees. What is it that you're making of this? Amnish, you'll have to unmute yourself.
I think I am unmuted.
Yes, now we can hear you, Amnish.
Okay.
Go ahead.
Okay. So you see the acquisition is at around 6.5 times EV to sales, and it is definitely not cheap. That is one. Secondly, if you look at the portfolio of Torrent and portfolio of JB Chemicals, whether it is, you can say, medicines like Rentec, whether it is Nicardia or some of the other plays which JB Chemical offers them in the domestic markets, it is definitely a complementary deal. And it offers them also, you can say, more branded generics in India and overseas, and also strengthens them in the CDMO space. Now, given the fact that they need to, you can say, pay out 12,000 crores, they don't have that kind of money in the balance sheet. Plus, you see, it's slightly complicated because you are acquiring some stake, you are making an open offer, and then your merger is there. In the longer term, there's a scope to increase the margins. In the longer term, it will play out to the benefit of Torrent Pharma. But yes, in the near term, I don't think there is anything which is very meaningful on the table in terms of, say, any immediate reaction to the stock price and all. In the longer term, definitely Torrent Pharma will gain from it. May not be in FY26 because the debt will come on the balance sheet. But as you also said, that FY27 second half, by that time, they want to get rid of the debt. I think by that time, the synergies will also start coming in, which might push their margins up by 2 to 3%. So in the longer term, it will definitely add value to Torrent Pharma.
Right, Chandan Taparia as well joins in on the show right now. Chandan, hi, morning. Good to have you on the show. Chandan, what is it that you're making of the charts of Torrent Pharma? Because the stock will react to this deal today.
Good morning. We have seen buying interest in most of the pharma counter in last 2-3 trading session, and Torrent has rallied well by more than 5%. The only concern is that it has been consolidating in a range from last 3 to 4 months, but a small follow-up could lead to the next leg of rally. In fact, on the daily chart, it has given a decisive hold above 3,300 levels, and a small follow-up can lead the counter towards higher bend. So I believe buying interest could emerge with support of 30 to 80. Torrent Pharma has potential to rally towards 3,450 to 3,500 marks.
Amnish, one stock which in a sense has really pole vaulted is Geo Financial, suddenly from 250 to 320, 330. What's happening there? I mean, in terms of in business activity, there nothing has picked up. But the stock seems to be really moving from strength to strength.
Even very difficult to say because you see it's a very volatile stock. Earlier also from close to 200 to 20, it went all the way to 340, 350 and then it reacted. Now, in terms of business, yes, there are not many material things happening. They might be, you can say, they are, I think, gradually building up and they might be looking at, say, your mutual fund is one space they are looking at, then your lending and all are there. But I think on a very fundamental basis, I won't be able to give you any reasons why the stock price has shown the upward movement.
Looking at some of the other buzzers from the week gone by, well, Torrent Pharma already jumped up about 4.25% on Friday, as did Geo Financial, was up about almost 3.5%. It's interesting that there's Asian Paints as well, which held out by about 3% in Friday's session. IndusInd Bank, Adani Enterprises, a fair amount of sectoral churn was clearly at play within the large caps. The broader market health as well is looking like in ship shape. In fact, if nothing, the small caps did a lot better than what the benchmarks did. But Amnish, soon it's going to be all about earnings and it will start off with IT. Do you think the negatives are in the price, or do you think the commentary still this quarter is going to be very critical from what the services companies actually display?
The IT services, the commentaries are not likely to be very different from what we have seen in the past couple of quarters. There might be, you can say, solitary cases here or there where they might give you some indication of any recovery. But what we are learning as of now is that there is no big change in the commentary. In the near to medium term, I think at least which I can say for the next couple of quarters, you will not see any meaningful uptick happening. Obviously, it will depend upon, you can say, various segments, some of the companies which are on the, say, maybe BFSI or your AI related stuff. There might be, you can say, some sort of a stability, but for example, say ER&D and the companies which are catering to more like, you can say, auto related stuff in the Europe and all. I think there you will continue to see some pressure which will continue to build up. So I think no big change over there. Some of the niches will continue to do well. But in terms of commentary, we are not expecting anything drastic to happen as far as your IT services are concerned.
Well, there'll be the monthly sales data as well from autos, which is going to be released just tomorrow. Once again, it seems like we're headed in for a mixed bag. For two-wheelers, it's the rural and the wedding season demand, which is going to play up. So perhaps anticipating better numbers from two-wheeler majors. For PVs, lower inquiries and delays in conversions is what we're anticipating. So perhaps weaker at that count. For tractors, single-digit volume growth on favorable base, topped up with a good monsoon as well. And for CVs, the industry volumes in any case have been a little bit subdued. So perhaps we'll see that trend play out this time around as well. But Charan, anything that you're spotting within the auto pack, anything that's looking tradable?
So Aisha, I think two stocks that are on my radar is firstly TVS. I've given a buy recently also, and looking at their EV sector, EV sales and two-wheeler sales, I think they'll report a good set of numbers. Secondly, Mahindra and Mahindra, I think everywhere I go, I see their four-wheeler EV cars everywhere. Every corner you can see one, so you can expect good numbers on that segment. And I think on the tractor and other fronts, maybe they see single-digit to double-digit growth, or especially on the EV sector, I think they can expect a very good number this month at least. So these two stocks definitely, and followed by Eicher Motors also on price action terms. I think it's looking very decent. If someone actually wants to make a position, they can see these three stocks with a decent risk-reward ratio. I think they will give good returns in the coming weeks.
All right, so let's watch out for TVS Motors and Eicher Motors specifically within the two-wheeler pack, because out of all the four companies in the listed space, these two companies are expected to outperform the rest and could likely post a double-digit growth this time around as well. So all eyes on the auto sales data, but other than that, AMFI will officially announce the changes soon on the recategorization, with Indian Hotels, Solar Industries and Muscat Dog as likely large cap entrants. Let's go across to Varun, who is joining us with more details on this. Varun.
Well, so the AMFI recategorization will happen in the first week of July, and actually cutoff period spans from January 1st of 2025 to 30th of June, that is today, of 2025. And the actually categorization will take effect from 1st of August 2025. Now, the overall changes will not lead to any major inflows or outflows from any index or any stock, but the overall cutoff, the large cap and the mid cap cutoff is expected to change. Now, the large cap cutoff, it is expected to come down from 1 lakh crore to around 91,600 crores, and the mid cap threshold is expected to come down from 33,200 crores to around 30,700 crores, and these are all are Nuvama estimates. There are three stocks which basically you need to keep an eye on, and this is because of the demergers that have happened. Siemens Energy, that would enter into the large cap segment, ITC Hotel, that would enter into the mid cap segment, and also Hexaware would enter into the mid cap category. Other than this, there are several changes that would be made. For example, the large cap entrants would be Indian Hotels, Muscat Dog, Max Healthcare, JSPL, Union Bank of India. These are some of the probable names which could enter the large cap segments. The stocks which would move from large cap to mid caps, one of the interesting name is Hero MotoCorp. Other than that is Indian Overseas Bank, you have ICICI Prudential Life, Polycab, Bosch. Stocks which would enter the mid cap categories are basically Narayan Rudalaya, Laurus Labs, Chola Finance, ITC Hotels. These are some of the stocks which could enter the mid cap segment. Stocks which could move from mid cap to small cap are Ola Electric, IGL, Syngene International, Tata Technologies. These are some of the stocks which could move from the mid cap to small cap segment. So there are several changes in stocks that could be made, but yes, Nuvama is not expecting any big inflows or outflows because of AMFI recategorization. But yet, look at the stocks, and the overall changes will happen in the first week of July, and the actually effective date would be 1st of August 2025.
Okay, that's the take coming in on the AMFI recategorization and how it's going to actually pan out. In the meantime, some of the other active movers today could be a BHEL. Remember, we just highlighted that they've got an LOA from Adani Power for 6 thermal units of 800 megawatts. The order size is around 6,500 odd crore rupees. The other one, of course, Titagarh Rail as well, because of the order wins. Remember, they've bagged about 430 odd crore rupees of a contract from the Maharashtra Metro as well for the supply of 12 additional train sets. So that's the other stock which is also going to be in focus this morning. But Chandan, just wanted to flag off these two stocks and how you see the charts, both BHEL as well as Titagarh.
Yeah, so looking at BHEL, the stock really did well by more than 5% in the last week. It has been making high rise, high lows from last 4 trading sessions. However, on last trading day, it remained consolidative, but trend is positive. On the weekly chart, it has given a breakout, so a small decline could be bought. I believe with support of 258, it has potential to rally towards 272 kind of level. Talking about Titagarh, bias seems positive. In fact, the declines could be bought with support of 910. It can head towards 975 kind of levels.
All right, so that's about Titagarh Rail. Let's watch out for that. But in some of the other news, we also have Mazagon Dock in focus, as the company on Friday has approved the acquisition of a controlling stake in Sri Lanka's large and most established shipyard, that is Colombo Dockyard, at an EV by sales of 1.3 times. Amnish, just wanted to have your take on Mazagon Dock. If you could analyze this particular deal, what could it mean for Mazagon Dock, and also because of AMFI recategorization as well, the stock will be in focus. So what should investors do?
Stock acquisition actually is a positive, because if you look at the Indian companies which are on the, you can say, shipping side, whether commercial or defense, first of all, there's a huge runway of growth, because we are not building enough, you can say, ships, whether these are commercial ships or whether these are for the defense purposes. And if you look at, say, a company like, say, Mazagon Dock, which is into submarine, which is into all sorts of ships, for them it is positive. Now, as far as your Sri Lankan acquisition is concerned, I think over there one needs to look at, because I think that will be primarily for, you can say, the commercial ship, because it won't be possible to extend your defense wing over there. That is what I thought first. The second is that all these shipping companies, they could be looking at significantly expanding their production of particularly the, you can say, the commercial ship, on the commercial shipbuilding side, because India hardly makes anything, and that too particularly above the 10,000 DWT weight. Now, if that, I am not sure as of now if that particular shipyard has got the capacity to build a larger ships of more than 10,000 DWT or 20,000. Now, if that happens, so that will give actually Mazagon Dock a lot of fuel to accelerate growth, because India wants to develop its shipbuilding industry in a big way, and which could play out to the advantage of Mazagon Dock. Now, regarding the valuation and all, I think it remains quite an expensive stock. It has run up quite sharply after the brief reaction which happened towards the 3Q of last year. And I think from here on, all these names, I think one will have to take a very, very long-term viewpoint of, say, 3 to 5 years at least, to make any very sizable returns on these stocks.
All right, so that's the take when it comes to Mazagon Dock. This deal is seen to be on the positive side. There's a long runway of growth, but the valuations at which the stock is trading right now is fairly valued, and one can have the stock in the portfolio, but should really have a long-term view on this particular counter. But other than that, in some of the other news flow, we also have IRCTC that will be in focus today on the back of railways full upgradation of rather passenger reservation systems by the end of 2025 is what they have announced, wherein the new system will actually handle 1.5 lakhs booking per minute versus the current capacity of 32,000 bookings per minute, and this upgradation will really be a good booster, or rather relief for all the consumers out there. And along with that, the passenger reservation charts will actually be prepared 8 hours before the departure of the train, which was earlier just 2 hours. And just wanted to have your take, Amnish, yet again on this one, because for the consumer point of view, it's been a big relief that could come in with more bookings that passengers can do at this point in time. The chart preparation will actually be way before than what was seen earlier. But what could it really mean for IRCTC? Because for IRCTC, they have always been flooded with number of bookings with respect to Tatkal as well. But with this enhancement of the number of bookings per minute, what could it really mean for the financial metrics for IRCTC?
You see, if you look at the IRCTC stock or the company in particular, you see, this technology upgradation will enable them to handle much more traffic in their systems or bookings. But it remains to be seen what is the limiting factor. Is it the technological capability to handle the number of bookings, or it is the number of, you can say, the overall seats in your trains which are available, or the passengers which are booking the tickets online? So I think it is, if we increase that capacity 5 times, it doesn't necessarily mean that it is going to have a very, very sharp jump as far as IRCTC revenues are concerned. Because for revenue jump, you will have to have more number of seats which are available. You will have to have more consumers who start booking online. Will it have some sort of a positive impact on the earnings? The answer is yes, it will have a positive impact, but it might not turn out to be immediate. You are having some capacity, you are having the capability, number of trains is rising, and so will be the booking. So that will play out in the longer term. It will remove the bottleneck if it was there for the growth, but it is not going to be a very big game changer that it boosts the, you can say, number dramatically.
All right, so that's the fundamental take coming in on IRCTC. But Chandan, just wanted to have a chart check by you as well, because for the past 6 to 7 days, I could see that the stock has been inching higher, but now nudging closer to that 800 odd mark. Give us your take when it comes to technical pattern for IRCTC.
So it took support near 745 marks and then really dwelled to 789. However, the major trend is positive to range bound and decline could be bought. However, multiple hurdles are visible near 800, but it can again reclaim to those levels based on its moving average behavior. So one can buy with support of 770. It has potential to rally towards 800 to 810 levels.
Okay, let's look at what's been the weak link in the market. And we were flagging off some of the sectoral losers, while metals, of course, on one hand held out very smartly. There were sectors which were in the red as well, and IT, of course, continues to be a big question mark. It was no different in Friday's session too. In fact, names like Eternal, Dr. Reddy's, Tata Consumer, even Bajaj Finance and Axis took a little bit of a pause, if you will, in the week gone by. Amnish, other than IT, where is it that you think that there is a question mark on what earnings are going to look like in the upcoming quarter?
Aisha, we are yet to, you can say, freeze our numbers for the quarter because it is just closing by. But whatever I am learning as of now, say for example, you look at, say, some of the names also you talked about, say, you look at the consumption space. So in the consumption space, first of all, there has been a lot of, you can say, impact of the weather because we didn't have the intense summer like what we had last year. So in the consumption space, whether the companies which are there on the certain segments of the consumer durables, or whether these are some of the companies which are catering to the summer demand, so those particular segments are going to hit those specific companies. Similarly, if you look at, say, the broader, you can say, staple space, we are not learning of any sort of a major acceleration over there. There is some bit of, you can say, tit-at-bits improvement in demand which is happening over there. You look at, say, other segments in the broader consumption, whether it is retail, whether it is QSR. So it has become very, very, I would say, consumer, very, very company and segment specific, and there is no broader uptick in the consumption which is visible so far. So that is That is, I could say, one particular, you can say, sector or the segment where you might see some improvement, some stability in the margin, but not a very, very runaway when it comes to the entire, you can say, broader consumption space. That is one. Secondly, as you rightly said, IT is something which doesn't look, you can say, that exciting as of now. Among, I think, the segment which I believe where they will continue to do well, one could be capital goods, because last year we had elections, so some sort of execution delays they were there in the first half, so that will continue to do well. Travel continues to do well. I believe even your pharma, healthcare, and hospitals. So that is another segment you will see reasonable level of you can say numbers coming in. So I think there are not likely to be, you can say, changes fundamentally in this quarter than what we had seen in the fourth quarter as far as your sectors are concerned. There are specific sectors which were earlier doing well. They will continue to do well, but there are not likely to be any big changes which are likely to happen in my view as of now. We might have to wait for, say, another quarter till the time the full impact of the tax cut or the monsoons actually flows out into the system.
Right, absolutely. Though for the week gone by, it was the realty sector which underperformed. It was almost a 2% knock that you had for the Nifty Realty Index. Though it's, only fair, I guess. It was a little bit of a profit taking, which was much due. Remember, the sector has pretty much had a one-way move up since the RBI cut rates aggressively in the previous policy decision. But Sharan, what is your own take on whether realty will continue to be the laggard sector this week too?
So, Aisha, I think profit booking is definitely seen, and I think it can continue this week also. But looking at their new planned projects and the amount of sales they are getting, I think when the results will come, I think that will be a turning point for the sector. Because looking at their sales, I think their profits and revenue are going to basically outperform their previous years. So fundamentally, the sector is looking very nice, though technically you will see some kind of profit booking because it was outperforming each and every index for the past 3 weeks. So definitely someone is going to take some profit at some point of time. But these stocks, again, are very close to their breakout levels. They are not seeing significant downside movements, maybe 1 or 2% cut on a daily basis, not like they are going down by 5-8% or in a single day. So definitely small amount of selling is witnessed. I think with the result season, I think that is about to change. So maybe if someone wants to make a position, I think I would still suggest go for big brands like DLF, Prestige, Oberoi. I think their results are going to be very good. A buy on dip strategy could be initiated in realty, but definitely you can wait for a week or maybe for 5 to 8 trading sessions and start a buy on dip strategy in the sector.
All right, so that's about select real estate counters. Let's watch out for those counters as well. But other than that, all eyes today will be on Ashok Leyland as well, because the company did host its roadshow, wherein interesting comments coming in, where the company is actually highlighting that they expect the MHCV industry likely to grow in the mid and single digit in FY26, and they are clearly saying that for now the only target for them is on profitability versus market share gain at this point in time. The management is confident of maintaining the healthy margins as the growth in the non-MHCV segment of aftermarket defense, power solutions, they are better placed and likely to contribute in the profitability of the company. But Chandan, what is your take when it comes to Ashok Leyland? Well, of course, this company will be in focus for the auto sales data as well. But technically, how do you see the stock placed?
Yeah, technically, stock looks good for next 5 to 10% kind of rally. It has been doing well from last 3 months, really do well from 192 to 250 marks. And in last 6 to 7 days, really do well from 232 to 250. I believe the higher base is going to shift here with support of 242. I believe potential upside could be seen towards 265 in the count.
Okay, just scraping through what the current setup is. For me, I think it's the dollar index which is of immense importance. So while we may go here, we may go there, for me the story is the dollar index. There is weakness in the dollar index and there is strength in US equities. Rarely that happens, because if the dollar is down, US equities ideally should have not gone up. But the fact that dollar index is also coinciding with flows into emerging markets, money is coming back into, or money is moving out of bonds in this case, going to S&P, moving to Bitcoin. So the sheer number of new highs which are there in the world, I think is quite interesting. That's the setup for you. 16.3 for the VIX. I'm looking US VIX. 4.2 for the yield and 97.4. Chandan, this is like a perfect scenario if you are long in this market. No volatility, weakness in the dollar index, strong flows, strength in Bitcoin, which is risk, and US markets at a new high.
Yes, I totally agree. In fact, we are quite positive on the Indian market. And if I look at the seasonality point of view, which I had mentioned earlier, that in the month of July, most of the equity market remains positive. And there is the data track record of last 10 years. Even in July, 10 out of 10 months were positive for Dow, as Nifty 500 or Nifty 50. So I believe that July momentum could continue. And market is having perfect intermarket studies, whether decline in the gold or silver, dollar index is in control, USD INR is comparatively moving in a range. Nifty has been making higher top, higher bottom. CBO VIX and India VIX has been cooling down. So I believe VIX below 13 could continue to keep the bullish stance, and because of that, limited downside could be bought. And I believe till Nifty holds above 25,200, ongoing momentum could extend towards the new lifetime high of 26,277 in the Nifty index.
Amnish, what's your view on purely this entire hum and drum which is happening in the power space? There's enough and more data which now seems to be indicating that the power demand which was expected to go higher in the month of May and June, that has not happened. New policies in the state of Maharashtra also means that the power prices or the power realization for merchant power companies is unlikely to move higher. Is it time now to check out of power stocks, power utilities, or power producers, or for that matter, power transmitters?
Yeah, Nikunj, I don't think it is a structural trend. Say, for example, as far as the demand is concerned, this time around we had a very patchy summer. Patchy in the sense that in the month of, say, May, even in the western parts of the country or the southern parts of the country, monsoon arrived 15 days earlier than what it usually happens. And even in the northern and the central belt of the country, which usually has intense heat waves, we had continuous, you can say every week or 10 days rains happening. So due to that very particular factor, I think the power demand this year, it has not, you can say, moved up like it used to. It has been happening, say, from the last 2 to 3 years. But definitely, as the consumers are upgrading, as the technological systems are upgrading, more your usage of AC, more power, you can say, appliances and all, I think the demand eventually is going to go up in the longer term. Now, as far as you can say the other regulatory aspects are concerned, you see, they continue to come. But yes, there are two ways to look at the power sector. One being that will it give you growth in the longer term? The answer is yes. But as far as you're buying the stocks are concerned, there are usually the times which come in between that you have got 1 or 2 bad quarters or the numbers are not that great and you get stocks on the lower level. But given the fact that the power stocks over the last, say, if you look at particularly 2-3 years of period, so they have given you multi-bagger returns. Many of them have actually been 4-5 times also. So now incremental returns actually depend upon how much growth you can sustain and how much is the longevity. Longevity is definitely there, but now definitely we are not in a phase that we will just take out any name, pick it up, and in the next 6 months we will make money. So we will have to be very resilient. We will have to wait for the returns to play out over here. Yes, 1 or 2 quarters intermittently can come as soft, which is likely to be the scenario for the 1Q of this year also.
All right, so that's about the power space. But with this, let's also get you some of the mid-cap bets from both of our experts. And Sharan, you go first. Tell us which is the mid-cap stock that you are liking this morning.
Again, I like the oil and gas space. So my mid-cap pick is basically IGL. You can buy at current levels. Your target should be 221 to 228. Your stop loss should be around 207.
All right, that's a buy coming in on IGL. Let's watch out for that. The stock sustaining above that 200 mark for itself. But Chandan, what about you? Which is your mid-cap idea?
I'll focus on Apollo Hospital. Selective pharma counters or healthcare companies are doing well. Apollo Hospital has given a consolidation breakout of last almost 12 to 15 weeks. Decisive hold with sustained buying interest clearly indicates momentum could continue. So one can buy with support of 71.50, and the stock has potential to rally towards 7600 marks.
Chandan, in general, do you think hospital stocks could make a comeback? We've had a lean patch there also.
Yeah, I believe buying interest is clearly visible, whether we talk about the Lotus Labs or Apollo Hospital. So I believe some bargain buying or sector rotation could be seen in the pharma counter or healthcare companies.
Amnish, there seems to be a lot of interest, which I understand is coming in this entire CDMO space. And, when I speak to investors, when I speak to some companies, the sense I'm getting is that this China Plus One is a real deal now. Within the CMO space, the number one name is DVs. We know that. But what outside the comfort zone of DVs one should look at if somebody really wants to take a long haul bet in CDMO as a theme?
You see, CDMO as a space has been doing well. And now if we are looking strictly at China Plus One, then actually in pharma, China Plus One has always been there, with one big difference that as far as your APIs are concerned, we are still, in fact, India is dependent on China for quite a good number of APIs. Now, as far as your CDMO space is concerned, I think the growth trajectory is definitely there. The companies have been growing. DBs intermittently had some sort of, I would say, margin pressure which also resulted in the stock correcting. So DBs, I think it's a good name. Having said that, it has never been cheap and will never be cheap. Okay, so now as far as the other CDMO stocks are concerned, I think one has to be very, very stock specific over here. You can say look at the CDMO stocks also. But having said that, I think the flavor has been more on the domestic side because of the uncertainty on how the duties on the, you can say, on the tariffs on the US will play out, how the other factors are going to play out. So I will not say that it is primarily due to China Plus One, because some of these companies have been there since long. They have been growing. They have been adding more and more molecules. So I think once a tariff clarity comes and we enter into some sort of a deal, then one may look at, say, some sort of a near-term positive move coming in the CDMO stocks. But in the longer term, I think one will have to also keep an eye on how the valuations are in some of these counters.
All right, so that's about the pharma space and select CDMO players. But with this, Amnish, we'd like to thank you for taking the time out today morning and speaking with us and sharing your views on the markets. But for this, viewers, let's also get you some of the top headlines that we are tracking this morning. And first up, Trump said in an interview that he has secured a group of very wealthy people to buy TikTok in the US. Trump